was a record half-year result for us. Profit of 257 million, EBITDA 461 for the half. We paid a dividend of 13 cents, which was at the top end of our sort of 25 to 50% net profit after tax range. That means now we've paid out $330 million since November last year back to shareholders. So there was a 20 cent capital return and dividend in the end of last year. Look, the dividend policy is at 25 to 50% of net profit after tax, and if cash does build on the balance sheet, then the board's determined to return that to shareholders. We're not going to become a cash box, so we'll continue to pay dividends out. Costs in the first half were $60 a tonne, which was basically in line with what we guided, and we were, just before we paid that dividend last week, we were basically back to net cash again, so we drew down $130 odd million to pay that dividend. But we'll be, in a strong position in the next, as the months advance. Now, just touch on some of the operations. Just Maules Creek. So Maules Creek is going to do 11 million tonnes this year. It's got one more step up in its ramp-up phase. So it'll get to the full 13 million tonnes approved rate in FY20. That'll be the first year we get to there, but 11 million tonnes ROM this year and a little incremental step sort of for FY19 and then the full run rate in 20. The next fleet, the last fleet that comes, sort of starts operating from July of this year. So that'll sort of get us up to that final step. The met coal split, probably a little lower than what we would have indicated 6 months ago, 20 to 25% in the second half of this year, after I think we did about 19% in the first half. So we're probably a little bit behind the sort of, we thought we'd get there in 5 years, and then we had some strong buying out of China for semi-soft, so we thought we'd pull that back to 4 years, but we'll just go back to our 5-year profile that we'd originally outlined. Next, just on Narrabri, a couple of things here. Look, the first half production was a little lower than expected. We've got to a point in the mine life where the depth of cover means that we have to install more ground support. So we had to go back and reinstall some more ground support in areas that we'd already developed. So we've said that'll give us that'll add about $2 a tonne for the rest of the mine life. But on the positive side, we mined through that fault there in panel 108, panel 107, the one we're just mining through. And with that success, we've determined that we can mine through that fault zone in both 108 and 109, which will add about 300,000 tonnes to production in each of those years. So that's a slight upgrade of production going forward. And then finally, the slide down the back, which people were very interested in on our roadshow, this one. So this shows our production profile as we see it at this point in time. And that's in FY24, we've got Vickery fully ramped at 10 million tonnes ROM, 8.5 million tonnes of product. We've also added an extra couple of million tonnes into Maules Creek. We think we can get the approval lifted from 13 to between 15 and 16 million tonnes with a modification. We've already done that sort of thing at Narrabri in the past. So we can expect we can get there. So by FY24, on a managed basis, we should be able to do up towards 35 million tonnes, which makes us a very significant player in the seaborne coal context. The only other couple of little things we bought, the 30% interest in Tarrawonga that we didn't own from Mitamitsu, that should settle in this half. We're just waiting for ministerial approval there. And there's also the one of the joint venture interests in the Narrabri mine, 7.5%, which was owned by EDF. They've sold their entire business to JERA, a trading company in Japan. We've preempted on that 7.5%, and so we should settle, we think, around mid-year, so it could well be in this financial year. So we'll move from our interest from 70% up to 77.5% at that mine.